Welcome to All In Uncensored with Ryan and Brian.
Welcome to All In Uncensored with Ryan and Brian and special guest,
Chris Butler.
Thank you guys. Thank you for having me. All
Glad
right,
you're
here we
on,
go.
Chris. We've been talking about this for a while.
We certainly have, yeah.
We've had a big announcement to make, and here it
this
is.
it. Chris Butler is a part of our team, officially 1/3 owner of All In Mortgage Brokers, and we are excited to have him. We all have our own roles, and when Brian and I were building this, Chris kind of came along. We worked with him at Home Trust before, and you two started talking.
Yeah, we just started having a dialogue, and I think really we just found like a lot of kismet and a lot of good energy and shared vision of growing something bigger beyond just lone wolf mortgage production. Wouldn't you think? Don't you agree, Chris, on that?
Yeah, I completely agree. I think from when we first started talking, our ideas aligned, are where we thought we could take this company, like what we could do. Obviously, power in numbers or strength in numbers was really the goal here. And just to have some accountability partners as well, like to kind of keep us moving along. And this is a hard business to do just by yourself. So I think the more people you have around you, that, just grows for the better good. And I couldn't be more excited on what we're building, the technology that we're doing. I mean, just the minds that we have here is so exciting. So thank you for the opportunity. Really appreciate the partnership with you guys, and let's kick some ass.
We all do something different really well, and as a team, that's great. We have the CEO.
Well, branch manager.
Okay.
Acting branch manager.
We're going to go CEO.
Okay, whatever. That'll work.
CIO.
Yeah. By the way, brilliant with your ideas. You have so many damn good ideas. I mean, we had to get 4 blackboards in here just to like
write down your ideas.
Yeah, just write down your ideas.
I'm good at the ideas, and you guys are going to help me implement those ideas.
Chief Idea Officer, everybody.
He's
CIO.
Chief Idea Officer.
And you are the CCC.
Yeah.
Because building a good team is all based on the foundation of good office culture. And so you, more than anybody, bring that life and that energy into the office, which we both appreciate.
I've talked about office culture for a long, long time.
Yeah.
For years. And being a part of this team, the three of us, allows me to really expand that. And now that we're up to what, 9?
Yeah. We have 9 people.
9 people. We've got 6 people below us.
Yeah, it's grown so fast. I mean, when did we start talking? Wasn't it back in
March or April?
Like late spring, something like that?
Yeah.
So this has been in the works for some time, and it's nice that we're able to finally kind of announce it, because we've been working so hard to bring this all together and to grow our team and do all that. So yeah, looking forward to 2025. It's going to be killer.
Yeah, and like Ryan and I touched on in our season 2, episode 1 that we just dropped at the beginning of this week, the AI that's out there right now to be able to implement that as a tool to help us scale this is it's mind blowing where we're at. Just in the last 3-4 months, we've had all this momentum just start gaining traction here, like with our CRM, which is going to be the backbone of everything we do. It's all about systems and organization and continuity throughout like all platforms. And you really brought a lot of that to the table, Chris.
I think having a well dialed in or well oiled machine in regards to a CRM is paramount to the success of any sales company, mortgage or whatever you're selling, right? So we're excited to be releasing our own proprietary CRM through a partnership with Bonzo, which is couldn't be more excited about. We're hoping to have that done here in the next probably 2-3 weeks, or by the end of the year is really the goal. And then we'll be rolling that out to the rest of our team and all of our junior LOs and that alike. So that's super exciting. Also, you spoke of AI. AI is something that it's coming. So, I mean, it's here already. So I think that the loan officers that don't use it or don't implement it are going to be behind the power curve come, 6 months, a year from now. So that's why we're really leaning heavy into it through AI marketing, video generation, AI, conversational AI, you name it. We're getting behind the platform heavy.
People are so scared of AI taking their jobs. It's not the people, it's not jobs getting taken over. If you don't implement AI, you're just going to lose your job and other people are going to spring forward. We our vision is to use AI basically with everything that we're doing.
Mhm.
CRM, marketing, like you said, everything in our business. AI is a little bit, it's a part of all of it.
Yeah.
Yeah. And I think we need to be careful, though, in the sense that I was speaking with our partners helping us build out our Bonzo platform, our CRM platform. And this job still requires a lot of that personal touch, a lot of reaching out to your past clients and being very mindful. Whereas an AI, someone, texting them out of the blue that hits the wrong way is something that we have to be super, super cautious about as we roll this out more in depth.
And to that point, Chris, AI is not meant to replace what we do. It's to help make what we do way more efficient. So
Client experience.
The client experience. The more we can be in front of our clients, working hand in hand with them, but streamline a lot of like the back end processes so it makes their experience way better, like you alluded to. That's what this is all about. Because I'd much rather be having the conversations with my clients on a weekly basis, ensuring that the process is going smoothly, and having AI really kind of backstop all that stuff and streamline the processes behind the scenes.
I think that's one of the best things about our team is we all see a transaction as relational, not as transactional. And we never want to lose that. No matter what we do, whether it be lead generation or anything else, we always want to be relational in everything that we do because that helps us in the long run.
Yeah, you couldn't say it better. I mean, that's where you have the success and longevity in this business, is caring about your clients, is not going after the make all the money you can on one transaction. It's about not only this transaction, but doing 2, 3, 4, 5 transactions down the road. I forget the exact number, but I think it's someone's going to, throughout a lifetime, they'll have 5, 6, 7 mortgage events, something along those lines. So if you can really be their mortgage lender of record or their guy, so to say, that's who has success in this industry. It's not those one-offs. We need to really focus on that longevity and not just the one.
Well, diving a little bit deeper into that, we were just down in Arizona and Chris from Windsor spoke and he taught us the hand that feeds you. The hand that feeds you is 100% driven on database and getting those transactions that on average, well, it used to be every 7 years. I think it's less than that now, but on average, every 7 years, an adult in your database will do a mortgage transaction of some sort. And if you can stay relational with all of those people, you're going to get a percentage of those.
And speaking of the hand that feeds, I think it's okay to go ahead and announce right now, we're going to be putting this presentation together to help realtor partners do a 2025 business planning session. And this presentation is powerful. The way that Chris Vinson with Windsor described it, it's like literally the visualization of putting everything in your hand, and each finger represents a sphere that you're going to be working. And then this is what you're going to work out of. You're going to get a 30 to 35% pull through rate on that by those activities. Now, getting back to AI can help support all of that. So your activity is most of your activity is focused on that hand and not just all the other stuff you have to do outside of the hand.
Well, the interesting thing about the hand that feeds you too is it's going back to basics.
Yes.
Yeah, very much so. Yeah.
We're talking about AI and we're talking about all that, and that can help, but really the hand is going back to basics. Not just making your calls, but doing it in a systematic way.
Yeah, and I think one of the things that hit home with me is, especially new people in the business that don't have a transaction under their belt, like a lot of our junior LOs that we've hired on, go to your phone, see how many contacts you have on your phone, send a message out to every single one of those contacts.
That's your database.
That's your database. Yep. And say, hey, I'm in this business. I could use your help. Who do you know? And really leverage the people that you know and that care about you and care about your success.
Yeah.
So I think that's an angle. And I really think, kind of going back to the realtor aspect of it, there's a lot of LOs out there that will just call up realtors and say, hey, give me business. I want your business. Well, realtors going, well, why should I give you my business?
Yeah, where's the value in that?
Where's the value? I have a guy, they've done a great job. They always close the loans. Maybe they don't know what kind of rate they're charging. They could be charging an astronomical rate, but that's not, it's important to agents, but it's not insanely important. They want to make sure the deal closes and it closes smoothly, right? So I think what we're putting together in regards to this hand that feeds, or a variation of that, is bringing value to our realtor partnerships, right? And helping them be successful, because let's not sugarcoat this. It's been a tough year for a lot of people in our business and in the real estate business. Thankfully, you know, we've done well, I would say, considering the rest of the industry. But you know, want to help other people, and that's really the goal and what we're doing, and that's going to lead to more prosperity and more success.
And again, it comes down to that mantra that Ryan and I have been, you know, talking about ad nauseum on our show, which is collaboration, right?
Mm-hmm.
Continuing to collaborate with other people in the lending industry, collaborating with our realtor partners, our title rep partners. In fact, we're collaborating with a title rep partner right now on some other unrelated things, but it's that synergy of collaboration that's going to be key to having everybody succeed and thrive in this next market cycle.
Yeah.
Yep.
Yeah, 100%.
Yep. So we were going to talk about Black Friday. What happened on Black Friday for credit card debt?
You guys buy anything?
I did not.
My
buy
wife
anything on
did.
Black Friday.
Oh, really?
Yeah.
Yeah.
So what happened on Black Friday with credit card debt in the country?
$10 billion worth of new credit card debt was created on Black Friday.
Billion with a B?
That puts our national credit card debt at 1.17 trillion. There's two things right now that Americans have the most of. It's debt, credit cards, bad debt, and equity in their homes. I looked it up this morning. The average equity of anybody who owns a home in the United States is $299,000, in which $193,000 of that is accessible.
So a lot of these folks are stuck on their 3 and 4% mortgage rates. And so they're kind of like at an impasse. On one hand, they're paying 30 to 31% on their credit card debt. And on another hand, they've got a 3% mortgage debt. So really, if they would understand the blended rate of all of their total combined debt and the ability to access their equity, it would make sense for them to leverage it somehow. So we do have a new program coming out there to where they don't have to necessarily get rid of that 3 or 4% rate.
We do.
Absolutely. Super exciting. Through a partnership with one of our lender partners called Nifty Door, basically the client can do it all online in the privacy of their own home. They can do it in their pajamas, sitting in bed. That's kind of what we see as the future for these HELOC options. There's not a tremendous underwriting process. It's for people that want to get out of that 25-30% credit card debt and do it quickly. I mean, we've heard that they can get money as quickly as 1-2 days?
No, 5 days with a 3-day right of rescission.
Oh, okay. Yeah. So it's amazing though, regardless. That's super fast money to get, and kind of, I don't know if you've been there, but if you've ever been kind of weighed down by credit card debt, that is tough on you and your family, right? So just the idea of getting out of that at a much more manageable payment can not only, improve your financial well-being, but just your overall attitude and your stress. And it's such a big deal that if we can help these people out there that are struggling right now, I think it's amazing.
Well, I mean, I've seen it on, when we pull credit with clients, we'll see their revolving debt lines and their minimum monthly payments required on that debt. And I mean, I just had a family friend share recently. They have about, I'll call it $25,000 in revolving debt on one credit card. And their interest rate's at 30.99%. Their minimum payment every month on that is $750 just to service the interest on that credit card.
And it's hard to get out of that.
Right. And it's maxed out. So how are they going to ever get ahead? How are they going to be able to start chunking down that principal when all they're ever doing is just trying to stay caught up with the interest only payments? And now you're stuck in a hamster wheel. You're stuck in a hamster wheel, and then times that by 3 or 4, because a lot of families have 3 or 4 credit card debts, credit cards that are maxed out. And kind of getting back to the theme of incorporating AI. So this HELOC program incorporates AI to help underwrite it, to help verify employment. So really, and that's the benefit to the borrower, because they get to do this in the comfort of their own home. They don't have to go into an office, sit down with somebody, have a consult, have to track down all this documentation, bring it in, have it scanned like you would in a credit union.
You can do it in your pajamas at 2:00 in the morning
while binge watching Breaking Bad or something. I mean,
yeah, absolutely.
Whatever you want to do.
And I think there's a level of, I don't want to say embarrassment. I think there's some people that would harbor, if they're $20,000, $30,000, $40,000, $50,000 in debt, the idea of having to go through a full underwrite process and do all that is just, it's a lot to handle. So making it quick and simple and easy, while still giving a relatively good rate on that HELOC is an amazing product. So really excited about being able to roll that out and allowing our clients, our past clients, future clients, new clients, access to this program is going to be just awesome.
And one cool thing that we're putting on our website soon is a blended rate calculator. You know, so you can put in your first mortgage, you can put in all your credit cards, their minimum payments, and then you can put in this HELOC and see what your monthly savings is that way from an interest standpoint, not only from a payment standpoint.
Mm-hmm.
Yeah, taking all of your debt, blending it into one blended rate debt calculation, and showing the cost to like pay off all that debt and what that new payment would be. So you're like really looking at inflow and outflow of cash. And so from my perspective, if we can put a client into a position of saving $1,200 a month in cash flow, think about how that would impact the family for savings, you know, little home projects around the house. Maybe they have to replace a hot water tank eventually or a refrigerator. That $1,200 a month savings would go a long way, wouldn't it?
Especially around the holidays too.
Yeah.
I mean, just having a little extra cash in your pocket or being able to relieve that credit card debt would be huge. And
we don't have a crystal ball, but we never know where the long-term rates are going to go either.
We don't.
You know, if they ever get down to, you know, somewhere 5% or below, we look at that blended rate calculator again and look at their first mortgage and that HELOC, and it might make sense to do a cash out refinance at that time because they're going to have a little bit more equity, be in a better loan to value standpoint, and get everything into one loan.
And also, because they've paid off all that revolving debt, their credit score is going to be higher too, which is going to get them a more favorable rate at that time. Yeah,
and kind of speaking of you guys remind me of what I'm doing with a lot of my past clients is setting a strike price. Now, what happened about a month and a half ago or something? We had a
like September, October-ish, right?
Yeah, something like that. We had a small dip in interest rates. They came down for about a week, maybe less. I think it was like 2-3 days that they popped down into the mid 5s.
It was right before the first Fed cut.
Correct. Yeah, that's right. I remember that. So what I'm doing with my past clients is this is something that's whether you work with us or you work with whoever your loan officer is out there, check in with them, figure out what is the number that would make you refinance. You know, it's going to vary based on your loan amount, whether you have $1 million loan or $100,000 loan. Like there's a big, difference in payment savings. So you got to talk with your loan officer regarding that. But set that strike price. Give your loan officer the thumbs up to pull your credit so that they can act really fast on your behalf, because sometimes these windows are super, super short and you have to attack it and get in that at the right time. And if you're working with a good loan officer, like let's say you're all in, right? With us. With us, we're on top of that stuff. We're tracking rates daily. We're leveraging experts in the industry like Barry Habib. We're following all this to make sure that our clients are protected and make sure that they're going to get the opportunity to refi when the pricing is the best.
Yeah, and working with us, you're bridging the gap, Yeah.
We can keep going. We can really, tons of puns here.
I know somebody who's really good at puns.
Who's that?
Brian Taylor.
Really?
Yeah.
Oh,
okay. Maybe
you can share. Maybe we'll do a podcast just on your puns. It might not get a lot of viewership though.
It may not.
It might get a lot.
Or it could be really
we
punny.
Never know.
It could be really punny. It
could be a trade wreck and that might get more views.
It could be really punny. You never know.
Terrible.
Yeah.
Okay. Getting back to AI. So the other thing with this HELOC thing is, Chris, you dove into this AI video creation thing to like basically create online ads for this HELOC program. It's mind blowing. Like it's crazy. Like whatever we can imagine to like help you guys visualize credit card debt and the equity in your home and how that can be like characters in like a little 30-second movie clip. That's what this thing has the ability to do.
The incredible thing about it is you just put in a few prompts and it creates a video.
Yeah.
Full, 30, 60-second video, whatever you want.
You can do whatever you want.
Yeah.
Yeah.
Like I was just playing around. It needs some work, it's work in progress, but I created one yesterday and it was a homeowner, just jacked, full of muscles, wielding a sword called the HELOC.
Yeah.
And fighting off villains. They look kind of like aliens or monsters. I don't know. That are credit cards.
Yeah.
And it's unbelievable. It created a narration. It did it in like a film noir style. It's like, I don't
It's
even
like
know what
Final
that is.
Fantasy X or
Final
something.
Fantasy, yeah. And I
Captions,
just gave it a
everything.
couple prompts.
Yeah.
I mean, dive it in. There's all these examples. One that comes to mind, someone did a prompt about do a video or make a video regarding Will Smith, who's obsessed with spaghetti. He eats spaghetti 24/7. He bathes in spaghetti. He sleeps in a spaghetti comforter, and all of his suits are made out of spaghetti. And the video that came out of it was unbelievable. Maybe we'll post it on the website just so people can see the power of this AI.
That's insane.
And, it's really limited by our own creativity. So we're going to put together some, I think, just fun stuff. I mean, we want to make mortgage is boring. It's boring.
So we're going to try and make it fun.
We're going to make it fun, and just kind of throw some ideas out there on what we can do, and
try to gamify it if we can.
Yeah, gamify. At minimum, there'll be some, interesting things to watch.
Yeah.
So yeah, that's super exciting, and look forward to rolling that out more. But this AI stuff is it's mind blowing.
Yeah. And then beyond that, speak to like 2025, like as we've continued to collaborate and we're building all this, what does 2025 outlook from your perspective look like for our team?
I think sky's the limit. I think that we've gone through some really tough times in the industry. I think that we were pretty protected in the sense that we had a big purchase business in the past. And so kind of continued along that. People were still buying houses. So I think the good loan officers out there still, stuck around. And I look at this from our perspective as a bit of a positive, because we're thinning out the herd a little bit. A lot of the people that just were doing onesie twosies that got in during COVID to do a refi because their aunt had a home or their mom had a home or their brother, and they did their refis and they made,
or if
$20,000,
they,
$30,000, $40,000.
Or if they worked in a boiler room type setting, right?
Yeah.
We're just slamming down apps through phone calls and just being super, super transactional.
Mm-hmm.
Well, I think the actual numbers on loan officers in the last 2 years is that it's gone
like
down.
half.
It's half.
It's half.
Yeah.
Similar with real estate agents as well.
Yeah.
So we've lost a huge chunk of who is in the industry. Now, is it probably for the better? I mean, you probably, like I said, thinned it out. So now there's more experience, I would say, in the business, but it's still unbelievable. But I look at it as an opportunity for us because we're still here and we have half the amount of competition out there.
Not only that, but still 70% of the loan officers are still in banked retail. So us being in the wholesale channel, we have an advantage there too, as far as total cost to borrower for doing a loan through the wholesale channel versus banked retail.
Yeah, I forget the number off the top of my head.
It's a little over $10,000.
$10,000. The average savings, a study was performed, and over $10,000.
It's over 10,000 now.
Yeah, and
it's going up.
It does.
Yeah, I think that we'll see how the refinances come. Most people in the industry think that rates will come down next year. Obviously, the Fed says they're looking at, what is it, five rate cuts, something like that?
One more rate cut at the end of this year, and
I'm talking 2025.
They were predicting 4 rate cuts next year. I just read on Barry Habib's site that it is down to 3 rate cuts for next year.
Okay,
the economy is doing better than what they predicted a couple months ago. We'll see how that pans out.
So that paints the picture that it might be a slow trog here on the refi boom, so to say. So I think there's going to still need to be a lot of focus on the purchase business and realtor partnerships.
Well, and the other thing too, though, there's a lot of people like myself. So, insurance costs are skyrocketing. Like that should be a total separate episode we do, is just like how insurance carriers are like factoring in climate change and risk management with all the losses that they've accumulated.
Like in Florida,
a great example. Yeah. Florida and California, the big players,
they're out. Yeah.
They can't even insure in those states.
Nope. They refuse to insure in those states because they know that the weather patterns and all of the once every 100-year events happening every year now, maybe sometimes multiple times a year.
Yeah. Florida is hurricanes and California is fires.
Yeah. I mean, that pretty much squashes that. But so what's happening in those 2 big states right now is affecting everybody across the entire country. So I know my home insurance rate just skyrocketed with my carrier. I'm just like, holy crap. But the other thing too is, so getting back to the homeownership aspect of it, a lot of people aren't able to do maintenance to their homes because they're not able to access their equity. So like I need a new roof and I'm going to need new gutters, and I have to do that to make sure that I'm still insurable as a homeowner. Otherwise I'm going to be on the secondary market paying 3 times as much. So again, all of this untapped and unused equity, it's there to help you as a homeowner make sure that you're protecting the home and doing the necessary maintenance on it. And there's a whole nother slew of people out there that are in need of that. And that's where this product, I'm excited about this product for that too.
Yeah. And I think if you look at utilizing your house as a bank, I've always been a big proponent. I mean, my background is in real estate development and rentals and flipping houses and things like that before I got into the mortgage industry way back when. But, you know, the house is a bank because we're seeing appreciation of the houses. Obviously, here in the Northwest, we're seeing higher appreciation than in other parts of the country.
Right.
I want to say it's 5-6% on average every year. However, during COVID, I know I live in Seattle. I know Seattle went up about 26% in 1 year.
That's not healthy. But,
So it's not healthy. It was crazy.
but it is what it is. And
but- Yeah, especially with the average home in King County, and I might be butchering this or getting this wrong, but I want to say it's like $850, something like that is the average home. So if you're going up 5% a year, that's $40,000 to $45,000 a year just in play money and free money, so to say. So utilizing or leveraging tools like HELOCs to pull some of that money out of your home is just going to continue to appreciate. And I can say that with confidence in our area. We're not in rural Nebraska or something like that, where we're not seeing similar appreciations, or suburban Detroit. I just think it's a great opportunity,
coming here to the end of the year, I think the national appreciation is still almost 4%.
Yeah.
And people are so worried about, inflation right now. What's the best thing you can do to stave off inflation? Own a home.
Yeah.
Right.
Yep.
If inflation's 2%, you're getting hit with gas and food and electricity and insurance and those type of things. But if you own a home, that appreciation is off the total value of your home. It's not off just your debt. So, if you owed, let's just say you owe $250,000, your house is worth $500. That 4% is off $500,000. That's $20,000 a year that you are
Gaining
quote
in value.
unquote gaining.
Yeah.
I think there's just so many tricks to it, and I would advise everybody to meet with a good financial planner. I had a client, young kid, I think it was like 25, 26 years old. He found value in this recent refi boom. He refinanced his home, dropped his rate 1%, ended up saving close to $500 a month on his particular home. And he actually paid down a little bit. He paid, I think it was a couple points to get there, about $10,000, or I forget the exact numbers, but he goes, I don't care about the play money that I'm utilizing in the home. I'm going to take this $500. I'm going to put it directly into my 401k.
Yeah.
At 25 years old, you can do the math. Like if you go on Google or whatever, go search compounding interest and say, hey, I'm going to put $500 in a month. See what that number looks like in 40 years.
Well,
and you tell me if it's worth the $10,000 cost of play money that you're not coming out of pocket for. It's amazing what that number looks like.
Brian and I always have this thing in the office. Brian says he's going to pay down his mortgage, and his mortgage is at 3%. And I told him if he did, I'm going to kick him in the balls.
Yeah,
because
He did.
he should absolutely put that any extra money. If you're paying 3% on your house,
It's almost
You
free
should-
money.
you should never pay that thing down.
not a dime more.
Not a dime more. Put that
Look,
in a
I get it.
401k.
I get
put
it in principle.
in the S&P 500.
Mm-hmm.
On average, every 10 there's not a 10-year period that the S&P 500 hasn't gone up on average. What, like 8%?
8, 9, 10%.
Yes.
Yeah.
It's arbitrage.
Yeah.
That's
so
how banks
Or go
make
pay
money.
cash for another house and have the rental income just cover my mortgage.
Yeah.
Come in the same spot. I own 2 homes.
I mean, when you have right now, when rates get to be 7-8%, I see where people are using more cash and buying down the rate, but those low percentage rates, like, yeah, don't pay a dime more.
No, I totally agree. If rates are at 6, 7, 8%, then it might make sense to do a bi-monthly mortgage or make that one extra payment per year, or do a 15 versus a 30.
So
I don't ever recommend that, by the way, but that's a whole nother
Yeah, I don't
subject.
recommend a 15-year, but
It just it takes away flexibility,
it really does. And
and the rates aren't much better, if at all.
Yeah, I mean, I come from a background. Well, I've learned in this business that everybody has different opinions on their financial well-being. Some people are obviously much more risk takers. Some people are much more conservative. I probably fall more on the risk taker side, given the fact that, self-employed entrepreneurs, been doing it for 15 plus years. So kind of working with these clients, some choose they want to pay down their home. Me, even at 7%, I'm like, I'm going to figure out a way to make more money than that 7%, put them in the other endeavors, whether it's real estate investment or whether it's, anything and everything. But that's just kind of how I'm wired, but everybody isn't wired that way.
We're
I think
definitely
there's
not talking about like crazy, super risky investments.
No.
The S&P 500
pork bellies. That's the best. Crypto.
Yeah. Just
Although, have you seen
put
Bitcoin?
in crypto.
Do you see Bitcoin today?
Yeah, but yes, that again.
It's a lot.
That's
have you seen the guy that paid for the pizza with Bitcoin?
Yeah. How many did I think he paid like 10,000 Bitcoin or something.
I think it's worth like, what was it? $100
million
or it's something insane. So it was 10,000 Bitcoin. So
10,000 Bitcoin.
So it was $1 billion. That's what it was. $1 billion.
I hope that pizza tasted
that
good.
2 pizzas are worth $1 billion.
That's insane.
So
that was in what?
But
like
he would have sold
2012?
it. It's hard to say. Oh, he would have sold it if it hit.
I'm sure the pizza guy sold it.
I'm sure.
Yeah,
maybe not.
Unless
Let's
he
track him
lost
down.
it in a cold wallet, we call it.
Yeah.
All right.
Well,
enough of crypto.
Anyway, enough of crypto. I should have invested 10 years ago.
Yeah.
What are you going to do?
You should invest in real estate now. Anybody who's on the fence as a home buyer, now is a great time to buy. It's never not a great time to buy.
I completely agree, especially right now around the holidays. I think if you're out there looking to buy, try and pull the trigger in the next 2-3 weeks, because there's a lot of deals to be had.
And the reason is competition's low because people kind of take the time off for the holidays and they don't go out and buy a house. That it's a lot less competition during the holidays than in July.
Yeah.
And we were talking briefly about this is the best time to buy as well, because you get to see a house at its ugliest. You get to see if it has drainage issues or whatever, the roof is leaking. I would much rather buy a home right now than in the middle of the summer where it's bright and sunny.
Yeah.
You just see the worst side of it. And then you can make, adjustments and ask for concessions from the seller and fixes, etc. So.
Well, Chris, thank you for driving down here, being on our show. Now it is all of our show.
Yeah. I mean, it's great. I feel we could go a little more uncensored. I think we should swear more, maybe really
next time we'll swear.
Yeah.
More.
Ramp it up.
Yeah.
Maybe,
throw
I could wear a mesh tank top or something.
Are you guys shitting me right now? You really want to go there?
We'll get there. We'll keep evolving and keep getting more and more uncensored.
Yes.
Maybe we undo the smoke alarms in our place and have a cigar and a bourbon in here.
Yeah, maybe next time it'll be bourbon and cigars as we sit here and just, swearing like a sailor.
I'm not opposed.
And that's
Brittany would be. Sorry, Britt, if you're watching.
Why?
We're not going to be smoking cigars inside of a building with fire alarms.
That's what they make those de-smokers or whatever.
Okay.
That's fine. Just wear a wool jacket. It'll soak up all the smoke.
I have a smoking jacket.
There you go.
Yeah.
A smoking jacket.
It's velvet. It's embroidered.
Anyway, wrapping up season 2, episode 2.
Yeah. We're going all in with Chris Butler, guys.
Wow.
We are all in with Chris Butler.
It's a lot of pressure
about it.
It's a lot of pressure.
Yeah. We got this, guys.
Thanks for tuning in.
Yep.
Yeah. Thank you so much. Really appreciate it. Look forward to 2025. We're gonna crush it.
Yep.
Excited for what's ahead of us.
Yep. I can't wait to introduce some other people on our next show.
What is it? It's another great day.
It is another great day.
Have a great day.